All right, good morning. Let's go over today's trade plan. So in the overnight session, we were using the 40 to 42 as the micro bull bear zone, and ES ended up balancing above that zone and went back up towards the 48s, which was the IB high, overnight high area from yesterday's session. And at this point, the overnight session is very balanced, and the market can break in either direction. So today the bull bear zone 40 to 42 is not a zone where, if we're holding above it, buyers are decidedly in control, because that's not the type of market we're in. Right now, bigger picture, we've still seen more sell side pressure. It's just that based on the strong buy response we got yesterday, and the fact that that buy response happened on pretty decent volume compared to the prior sessions, it tells me that buyers, stepped in pretty aggressively at that 33 to 35 support. And at this point, if we hold 40 to 42, it at least opens the door for breaking above 47.75 to 49.75 and going higher and testing the 55 quarter to 57 quarter, the 59, which was like the start of that breakdown, and potentially even the 62 half naked VPOC. So right now, if we hold above 40 to 42, the bias is neutral to slightly bullish. But we have to keep in mind that this is following a pretty decent sell-off, and there is still the possibility that we can get a continuation lower on the day time frame today. That yesterday was a balanced session. Now that we've balanced, now the market is at another inflection point, another decision point where we're either going to break out and go back up towards, test the 55 quarter to 57 quarter, 59, potentially a little bit higher, or we can get continuation lower through 40 to 42, and in that case, we will likely go to the gap fill at 33. We probably will not get any type of buy response at 33 to 35. I still have that highlighted as support, simply because we got a pretty decent response yesterday, and that is still a valid zone. It's just that given the context of balancing overnight and then breaking below 40 to 42, I'm not expecting much of a buy response there, and pretty likely if we break the bull bear zone today, we'll go down to at least fill the gap at 33, and then very likely we'll test 29 to 31, the initial support zone. And very similar to yesterday, I'm not expecting a big bounce. I mean, yesterday we got the big bounce, but that was unexpected. So same story today. 29 to 31 is a good spot to take profit on shorts, but we have to see a very clear signal in real time in order to take any long setups. Like yesterday, heading into 33 to 35, the internals were not all that weak. The tick wasn't all that weak, so we did have some signs telling us that this is not a liquidation type day. So same thing applies today. As we're heading into 29 to 31, we do want to see, the internals getting weaker. We do want to see a pretty negative tick, telling us that there's, more selling pressure today than there was yesterday. As long as that idea plays out, then 29 to 31 is okay as a profit target, but not necessarily a spot where we're going to look to fade the down move, because at that point the market could quite easily go down to 22 half to 25 half, test the bottom of balance, and if there's a lot of volume and a lot of momentum, then even that zone doesn't have to necessarily reverse the price action. But that is a decent zone. That is the bottom of a larger balance area. So by that point, if you get some sort of straight line move into the zone, right, where it's not like the market balances around like 27 or 29 or something for an hour or two and then breaks lower, then you want to avoid it definitely. But if the market goes more or less in a straight line, in a very short period of time, it just goes down to 22 half to 25 half, then the market would be oversold and short-term exhausted anyway, right? And you're hitting a good support zone, so then there's higher odds of getting responsive buying at 22 half to 25 half. And then again, cover your short. If you have any short position on, cover it at that zone, and then potentially consider a long setup But in that very particular circumstance, in that very particular scenario, otherwise, just focus on the higher odds trades, which below 40 to 42 would be on the short side. Now, if we get really extended, 1275 to 1475, something like that, then again, you can expect a better bounce back up towards the 21, 22 area. So at that point, the reward to risk would be decent on the long side, but that would be a pretty extended move, a pretty stretched market anyway. So the downside, that's the scenario. On the upside, we have to realize that we would be coming back into a very established balance. So the resistance zones can still attract responsive sellers. We can still get some rotational activity at the very minimum at the resistance zones. So breakout through 49.75 can easily take us to 55 quarter, 57 quarter, and we can get some rotation there, but it might not be the best spot to short the market because it could just be a small rotation. I mean, that's something that really needs to be timed and figured out in real time as you're watching the market head up there. If it's a strong breakout where you're seeing like plus 1100, 1200 ticks or something, and the internals are decidedly moving in that direction, heading higher, and you have strong internals, then skip it, right? Even though we can get some failure there, we can get some rotation. Focus on the conservative setups and the high odds trades, where you have conviction in the trade idea, or get very good trade location, like the top of the resistance zone or closer to 59, so that at the very minimum you get a few minutes to figure it out. Is this a trade you want to hold? Is this a trade that you're maybe just getting short-term rotation and then you get a little bit of balance and then it continues higher? Those are questions you can answer in real time. But if you have good trade location, then you don't have to necessarily take a loss on the setup to get your answer, right? You put yourself in a position where you get in at such a good price that if it works, you're in at a great price, you have great reward to risk. And if it doesn't work, well, you can still probably get out of the trade and not really have to take, full loss on the setup, because the market will at least balance or rotate a bit before it heads higher. So just keep that idea in mind. Initial resistance, a good spot to take profit, not necessarily the best spot to short the market. Of course, the market can still fail there, but that's the part that needs to be figured out as the market is approaching that zone. Again, just focus on getting good trade location if you are going to short the market, because above 47.75 to 49.75 short term, buyers would be in control. So we could go back up to 59s even quite easily before we get any decent rotation in the market. So right now, those are really the two key ideas. Above the bull bear zone, potential for breakout and testing 55 quarter, 57 quarter, and 59. Below the bull bear zone, probably going to fill the gap at 33, test 29 to 31. Those are the high odds targets, and then even 22 half to 25 half would be in play. So those are our main ideas. Let's watch the NYSE tick and the relative volume to gauge the type of move we can get. We would have to see some better volume coming into the market in order to get a sizable move. But after having such a narrow range balanced overnight session, the market is primed for a directional move. It's just a matter of which way it's going to go. On the econ calendar, we have consumer sentiment at 8:55 a.m. Central. So that's really the only econ report that you want to be just aware of, because that could result in some price fluctuation as the econ report comes out. So just make sure that you're aware of it. Aside from that, just watch the bull bear zone and pre-market resistance. Use that to gauge which sides in control, which side's pressing, and then focus on trading simply that side instead of getting chopped up back and forth. Just pick a side based on where we're trading in relation to that zone, and then just stick with it until you get your target. Don't try to chase it up and chase it down. Just be patient, let the market kind of tip its hand, tell you which way it's about to go, and then get involved, because whichever way it goes, there's at least decent profit potential, right? So like if it breaks out to the upside, then we can get a 8-point, 10-point move going up, and if it breaks down, again, we can get a 10 to 15 point or more move going down. So you don't have to be entering the market right at the start of the move to take advantage of it, because the targets are far enough that you can get involved even on the way as the move is playing out and still do all right. Bigger picture, there's still following kind of that selling activity, but we are kind of stabilizing here. So let's keep all of that stuff in mind. Let's keep an eye on the bull bear zone, pre-market resistance, and then take it from there.